Have you noticed something strange lately? Inflation headlines are everywhere. Geopolitical tension hasn't disappeared. Uncertainty feels constant. And yet, gold and silver are falling. For many people, this feels confusing. Gold is supposed to protect wealth. Silver is supposed to hedge chaos. So why are they going down now? To understand this, we need to step away from emotion and look at how modern markets actually work. Let's start with a realistic situation. Imagine a middle-class investor in the US or Europe. They earn a stable income. They don't trade daily. They buy gold or silver because they want safety, not excitement. When prices start falling, the instinctive thought is, something is wrong. Maybe gold is no longer reliable. Maybe I missed the peak. But the truth is more uncomfortable and more rational. Gold and silver aren't falling because they've lost value. They're falling because money has alternatives again. For most of the last decade, interest rates were close to zero. Holding cash paid nothing. Bonds paid almost nothing. So investors were pushed toward assets like gold, not because they loved gold, but because they had nowhere else to go. That environment has changed. Today, you can earn 4 to 5% just by holding short-term government bonds or cash-like instruments. Let's do very simple math. If you have $10,000 in gold, it pays you zero income. If you move that same $10,000 into a risk-free yield, it generates $400, $500 per year. No volatility, no storage cost, no waiting. So what happens? Large institutions quietly rebalance. Not emotionally, not dramatically, they simply shift. And when big money shifts, prices move. This isn't panic selling, it's opportunity cost. Now let's talk about psychology because this is where most people get confused. Gold and silver are emotional assets. People don't buy them for returns, they buy them for reassurance. So when prices drop, it feels like safety itself is failing. But markets don't reward feelings, they reward positioning. Another factor most people overlook is the strong dollar effect. Gold and silver are priced in dollars. When the dollar strengthens, often during rate hikes, metals naturally come under pressure. This doesn't mean gold is bad. It means the measuring stick is changing. Think of it like this. If the elevator's going down, the floor didn't move. You did. Now silver deserves a special mention. Silver isn't just a monetary metal. It's an industrial metal. When economic growth slows, industrial demand softens. That puts extra pressure on silver prices. So silver often falls harder, not because it's weaker, but because it sits between two worlds: investment and industry. Now here's the part most people miss. Short-term price drops don't tell you what gold is. They tell you what the market needs right now. Right now, markets want liquidity, yield, flexibility. Gold offers none of those in the short term. But here's the long-term reality, calmly stated. Gold and silver are not growth assets. They are insurance assets. Insurance always feels unnecessary. Until suddenly, it isn't. Financially intelligent people don't ask, "Why is gold falling?" They ask, "What role does gold play in this environment?" They don't chase metals when fear peaks. They don't abandon them when confidence returns. They understand cycles. Rising rates, pressure metals. Falling rates support them. Currency strength matters. Liquidity matters more. If you ignore this and react emotionally, you end up doing the opposite of what protection assets are meant for: buying high, selling low. So the current drop isn't a failure of gold or silver. It's a reminder that context matters more than headlines. Markets don't move based on fear alone. They move based on incentives, and incentives have shifted. Understanding that doesn't make you richer overnight, but it makes you calmer, clearer, and harder to manipulate. And in modern markets, that's already an advantage. If you found this perspective useful, consider subscribing for more.com. Rational explanations like this, no hype, no panic, just clarity.